All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market has been in a free fall most of the day. Free fall may be a little harsh to call it, but seeing some different action. Yeah, we've seen a lot of morning sells, and they just get bought back up and go higher. But today has been very different. And if you keep in mind, global markets are closed, right? We have Europe that just wrapped up, and some of it wrapping up, but global markets are essentially closed for the weekend. So you basically have the U.S. market to hedge against anything kind of going on in China, and we do have the coronavirus panic. Starting to set in a little bit, starting to become a little more entrenched here. Think about New York City, right? Most of us can relate to New York City. Think about if the government, U.S. government, tried to quarantine the city, right? Tried to keep anyone from going in or out. Really just quarantine an entire city like New York City. Can you imagine that? Pretty ludicrous, pretty insane to think about. But essentially, that's what China's trying to do to Wuhan. And, it's just a vast area, many people, a logistical, nightmare in a time where the Lunar New Year celebrations are kicking off there in China tomorrow. So, a lot of things kind of converging together to create, some of the worry, some of the panic, that is starting to set on. And we can see that the market has pretty much slid. Now, the reason I jumped on video is because we had 20K volume jump in here, right? Here we go. 2 minutes back to back of over 20K volume. What's that say? Well, the bottoms are, or excuse me, the market's probably not going to close below these levels, right? That's typically what it says. A lot of times, what we'll see happen is a little bit of a bounce, bleed to a new low, and then go a little bit higher from there. But to say, hey, the market's not going to close below this level is a reasonable assumption. It's not always right, but it's right a high percentage of the time. We did have 20K volume right back here, but this wasn't after some big slide. This was just breaking into a new low. Now we've had 20K volume after a pretty big slide, and so typically we will see that is the the bottom here on the day. We've seen tech roll over, which has been unusual. We have seen, small caps, right? Small caps have been lagging. We talked about that earlier this week. The lag in small caps, and that's one of the reasons the market vibe has eroded. And if you look at this small cap move here and this pop and now drop, that's a pretty ugly move. And it's the type that typically is followed by some lower price action. Not always. We had one right back here in November that went right on back up, but it's lagging the S&P. We continue to see that element. What has been leading has been tech, and it's still leading today. Right? Don't get me wrong. It's still leading today, but we're having a very different type of day in tech. Where we're getting this kind of top-down action. I don't think it's anything to be overly concerned about in terms of tech from just a chart technical standpoint. If you've been worried about overbought, you really haven't been involved in tech for a while. So, it's been overbought for a while. But is there some downside follow through to this? I do think if we see tech continue to slide into the close, and we see it kind of close down, the NASDAQ closed down about 1.5%, I think that does put the odds strongly in the favor of further drop into the weekend, or into the beginning of next week, after the weekend. But anyway, that's kind of where things sit. So we'll see kind of if these lows are able to hold. If they're not, if we do close below those lows, the chances of going lower sooner are significantly greater here for that. Okay. Now the challenge is in all cash. Sold Netflix this morning. I know it didn't hit the profit target, but I still took it. And it's down. It's reversed a little bit. One of those things where. We can play the what if and all that type of game a million times, but it just doesn't matter. There's no real value in it, and there's a million different permutations to the what ifs. So, bottom line is, we were able to pop on out, make a little bit of money there on Netflix, and now the challenge isn't all cash. We still have a signal valid for EWZ. And it is something that, just given what we are seeing, I'm not too interested in adding it. And that is just because the market vibe continues to erode. And to play the upside on an ETF when the market vibe's eroding, just doesn't feel right. And so I'm probably going to, say, well, I'll let that signal go. Wait for the next one. We've had a very good pace, in terms of entry triggers here in January. Most of these have gone on to some very nice trends. Here we even see GM really starting to, confirm its bearish trend. There we've seen Pepsi and Starbucks and IBM, really, really go well. So we've had some very good signals. Not all playable because of the option pricing. We've only had 4 that have been playable. We've had 5 that are playable. Couldn't play Netflix because we didn't have the cash, at the start. But, we had the first 2 drop. And then, we've been able to more than double the challenge value with the last 2 trades. And I only bring that up for the sake of highlighting that this isn't a race of, well, the more trades, a number quantity type of game. We don't need quantity. We don't need, infinite number of trades. We need the quality, and that's what it's designed to give. And so, going into the weekend in cash if we have to, I won't hesitate to do. But, we do have some downside crossovers starting to come in. A lot of these coming off of new highs like Facebook and Nike. So, we're just not going to get triggers on them. Amazon, which isn't coming off of a new high, but, a little bit of a short-term high, but not an all-time high. We could get a signal, but, even if we do, earnings are priced into it, and the options are just pretty insane. So, as I look at where the crossovers are now, even without running the challenge scan yet, the crossovers just aren't very, we're not seeing a lot that is going to give us a downside signal here just yet. But keep in mind, these things can change. There's ways to go here today. It looks like JD has a downside crossover on it here. But anyway, that's a little bit of what's going on with some of this coronavirus panic starting to set in, here, and a story that, we could continue to see erode this weekend. But, that has been why we've seen the markets drop, that we do have some bottoming volume, that has come in here on it. Pretty easy read in terms of what the probabilities are, right here. Do you go and short stuff aggressively right here into the end of the day? No, probably not. If there's something you want to day trade to the upside, be a little careful because implied volatilities are a little bit high. But, chances are you'll get a little bit of price action in your favor here overall. But I think one of the things we're going to be looking at this weekend, and that investors are going to have to tackle this weekend, is the fact that there is some severe erosion in some longer-term charts that's happening this week. I mean, JP Morgan, this is very different price action than investors have experienced for JP Morgan in over 3 months. It doesn't mean the end is here. It doesn't mean it's a terrible stock. It doesn't mean it's going down forever. We can see this whipsaw right on back very nicely. But, investors are going to have to tackle this element of, this is some ugly price action for the first time in a while. And, they look at safety sectors like healthcare. You think, well, coronavirus outbreak. Okay, healthcare is going to do well. Nope. Nope. Right? This is just general selling across the board, which the market has not experienced so far this year, and is experiencing here today. Heck, Micron's lowered today. I mean, how many times have we had that lately? Seemingly gaps up every day, but third day in a row where the gap up and sell. Here on it, and so we're just seeing some price action changes, coming into play to kind of correspond to some of the erosion that we have seen in the market metrics here. And you can say, well, is it the coronavirus catalyzing it? Is it, hey, all the bulls are in? Is it a sentiment thing where, here we have 45% of investors are strongly bullish, and the historical average is 38%. We only have 24 bearish, and the average is 30%. So, we have this really skewed market right now in terms of sentiment, where it's lower on neutral, lower on bearish than normal, and very, very bullish. And, for contrarian investors that look at something like this, you go, man, normally people are bullish when they're already in. And, that leaves them with one path of direction, and that is lower. And so we'll see kind of how that all, plays on out. Okay. If there is a signal to trade here this afternoon, I'll jump on video. If not, I'll just put some comments into the chat and, kind of let this be my wrap-up video here for the week, and, go from there. But hopefully we have a signal this afternoon. But anyway, we'll see. All right. Have yourselves a great one, and we'll talk to you later. Take care.